The flash at the bottom of the screen is from the Supreme Court again. The Supreme Court is refusing to stay the 10% quota which was recently announced for the economically weaker sections. And that should be important to take note of at this point in time. Okay, 61 points on the Nifty is what we've got. Mphasis actually we should put up the stock of Mphasis, take a quick look at what it is doing. I mean, there was the numbers came through and we'll be speaking with the management in just a bit. I think we should have them with us shortly. Okay, I'm being told that we have them now. Numbers were in line. Nitin Rakesh, CEO, and V. Surya Narayanan, CFO of the company, now join in to take some questions. Gentlemen, thanks very much, both of you, for being with us here. Nitin, coming to you first. I mean, it's largely a good quarter, but there was a sharp decline in the deal wins. It came in at $122 million compared to $210 million. Could you just talk about this? Are you sensing some slowdown in deal closures, etc., or this is purely seasonal?
We are quite pleased with the overall performance in the quarter. Of course, we've had a pretty good track record of winning deals, especially new gen services, consistently, I would say, over the last few quarters. So I won't read too much into just a quarter-over-quarter number of deal wins. Keep in mind, this is a seasonally difficult quarter given all the client shutdowns and the impact that you see coming out of that. So I won't read too much into it. I think on a YY basis, we are still ahead of our deal wins this time last year, 9 months consolidated. And I think last year was anyways our biggest deal win year ever. So if we still continue to win more deals than our biggest year, then I think we're doing something right.
Nitin, but the macro environment, Accenture called out moderation, for example, in client budgets in 2019 recently. So do you see macros impacting the sentiment for your business, for example?
2018 was a pretty tailwinded year because of a number of reasons, especially in the US. At this time, it's too early to call whether the macro environment has changed or there are headwinds on the horizon, but I think clients are a little more cautious given the volatility in the market in the calendar Q4 18. So far, we haven't really seen any major impact on client sentiment or spend budgets. I think at best the budget will be stable with a slightly upward bias, given that the tailwind of increased investment in tech, especially consumer-facing technology, is not going away. I think what you might see though is there will be some pressure on taking cost out of your run business. So we must have a robust service offering that helps clients apply things like automation, cognitive, essentially from a cost takeout and service transformation perspective. So I think overall that's the approach we are taking, and we are confident that the environment will continue to be stable.
Okay. Surya, just getting you into the conversation, what about the EBIT margin guidance of around 15 to 17%? Does that hold for next fiscal, FY20 as well?
As we had advocated at the beginning of the year of a EBIT band of 15 to 17%, we are clearly in line with that for the current year. For FY20, we'll come back after the Q4 results. But considering the operating levers which we have fully focused on in the last 6 quarters, we are confident of being within that band or even better for FY20.
Okay. All right. Fair enough. That's on the margins. But Nitin, coming back to you, digital risk declined around 2% sequentially to $22 million. What's the reason? And will it continue to operate in this revenue band of, say, $28 to $30 million?
Sure. I think 2 things happened in digital risk. Firstly, the environment is pretty headwinded, so the volume of mortgage origination continues to be challenged. And I think the other aspect that played out in calendar Q4, our Q3 was there was tremendous volatility in the secondary markets, and I think that does have an impact on a portion of our portfolio that does diligence services, both legal as well as trade diligence. And a lot of those deals kind of got pushed out into Q4, specifically in that business. I think basically the way we are looking at it is we will see sequential growth in that business in Q4. We'll probably take in a couple quarters to get back to the stated guidance range of 28 to 30. Probably won't happen in Q4, but we definitely think it'll happen in FY20.
Okay, Nitin, DXC's acquisition of Luxoft put revenues that Mphasis gets from DXC at risk. This quarter was strong for DXC HP, but the acquisition happened only in January. So going ahead, any risk to DXC revenues?
I think Mphasis teams are already fully deeply integrated with DXC clients, and the way we are going about building that business is by actually applying service transformation and application and cloud capability levers to find new opportunities for growth. We don't see that changing. Short to medium term, I see no impact from this acquisition on our opportunities at DXC. Our wallet share in the outsourcing contractor partner spend is still fairly low. It's in it's in single digits. I think we can get it to double digits. Medium to long term, I think we see additional opportunities because of this acquisition.
Okay, all right, Nitin, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's Mphasis just about higher by around 0.2%. But moving on to another set of numbers, then PNB Housing Finance, in fact, reported what was a good quarter with 11% disbursement growth. We have Sanjay Gupta, the MD of the company, who joins in to discuss the numbers this time round. Mr. Gupta, hi. Let's start, in fact, with the assets under management. That's actually slowed down a little bit, and I think it's the slowest that we've seen in the past 2 years odd. Will this run rate, according to you, be maintained?
We are not working in a vacuum, so the external environment does even impact this company. And because there's an overall slowdown, hence our growth rates from our previous years and quarters has come down a little bit, not significantly. And as I keep sort of saying that our growth rates will be about 1.5 to 1.7 times of the industry growth rate, we are maintaining that. And that is our guidance for the future also.
Okay, what about your net interest margins as well as spreads? They were aided by higher securitization this quarter, but Mr. Gupta, is it going to be sustained?
Well, securitization is business as usual, so it is unfair to say that in the last quarter we did securitization and hence our spreads and NIMs went up. And as I keep saying, out of the total AUM, 10% will be securitized quarter on quarter. It's business as usual. And in quarter 4 also we will securitize. And I'm sure and I hope that our spreads and NIMs will be protected for the entire year by a quarter.
So what was the incremental cost of borrowing versus average cost of borrowing in the third quarter?
The marginal cost of borrowing is today at about 830, 835. And the total cost of borrowing on the book is about at 7.85 or 7.9.
Your ratings were recently downgraded to AA from AAA. How is this going to impact your the ability for you to be able to access funds at a cheaper rate at the same level even?
The rationale does spell out that the promoter. So now India Rating is rating us on a standalone basis and without the promoter overhang, because the promoter, one, has indicated that they want to divest from the company. Second, their rating has come down to, so hence that was the impact, not because of the robustness of the operations of the organization.
Okay, all right, Mr. Gupta, we're going to leave it on that note. Thanks very much for joining in. So that's PNB Housing. In fact, NII up around 35%. Loan growth also up in the 30s this quarter for PNB Housing Finance. So good in terms of parameters.